Hello, ladies and gentlemen, and welcome back to another video. First things first, this is not financial advice, never will be. I'm not a licensed financial advisor, and investing in the market or any security is extreme high risk. With that understood and out of the way, let's dive into today's video, which is going to be the three most important things that you need to know about GameStop stock. And these are things that I have learned the hard way from reading, from losing money, from all these things along the way in my investing journey. Now, we'll get to some really big short-term price action predictions and updates at the end of this video, but let's start with our first topic of today's video, which is the most uncomfortable one for me to say, but it is the fact that price will come down. And you're probably thinking, wow, Captain Obvious, thank you for that little reminder. But I will say, when we'll get to the data points for our number two item here, and we'll get to the kind of the nitty gritty of what I think the most important thing really is to know with this stock. But the generalization of price will come down. What do I mean? I mean the fact that when it gets over $30 and when we're kind of all in that euphoric type mood, you know, trials and tribulations of spending so much time in the low 20s and then that quick upward assault, 20, 30, 40% up, that's really exciting. But in those moments, I always try and remind myself that price usually comes down from that spot. Now, the reasons why we can get to market mechanics wise, ETFs wise, but for me to know that and be realistic about that, I think is important. Now, that doesn't mean that there's never going to be, a MOAS or a squeeze type situation, or, when and if Ryan Cohen does a merger or acquisition, uses the close to $10 billion in cash. That's a different story. But in the meantime, if you are operating under the assumption that the company is chugging along, focusing on closing down stores to increase profitability, focus on revenue generating prospects like power packs and other streams that potentially generate cash for the company quarter after quarter, then I personally, that's how I operate. I operate with that mindset that when this stock gets above 30, maybe 35, touches $40, it usually comes down shortly thereafter. And of course, we can call that shenanigans. I don't want to use the C word if you catch my drift. But let me know in the thoughts and down in the comments below, your thoughts on what you kind of do when price gets up there, or, if you're in the MOAS camp, if you're not in the MOAS camp. But for me right now, I like to remind myself, whether it's covered calls, cash secured puts, selling shares up here to hopefully accumulate more down here. Like, those are things that I have to come to terms with. And it's not because I don't like GameStop or whatever. My ultimate goal is to have as many shares as possible. I want to be one of the top shareholders of this company one day. In order to do that, I have to play this the smart way, which is me in a probabilities way, which is when it gets up here, I have to make a decision for myself to do something to hopefully benefit and pick up more shares when we're down here. Now, the second point, and this is probably the most important aspect of this video, is the combination between technical analysis, fails to deliver, ETF creation and redemption, and borrow fee. All of those four things that I just mentioned are the epitome, and I think the most important thing to track when looking at GameStop stock. And I bundle them all in together, not to give you a generalization on, oh, I have to figure out, to me, which one's the most important, but I think they all play a part. And as you can see from my charts, I have so many indicators up technical analysis wise that you're probably like, what is this guy even looking at all day? Well, I typically watch the shorter term time frames on my chart. Let me know if you guys do too. And I think it was Larry Chang that actually said, don't do that. But sorry, Larry, I do that. I typically watch the 1, 3, or 5 minute chart pretty much all day, every day. But technical analysis wise, it is important, but it is not the most important thing. The reason why I lump it in with the other things is because watching these signals like the price momentum oscillator with a 55-day simple moving average on here to smooth things out, this is on Roaring Kitty's stock charts. And I can pull that up for a minute to see what he looks like, to see what he looks at. But this is something that I look at across all stocks, GameStop included, because I'm a 100% in shareholder. But I look at it for SPY, for crypto, for general market trends to kind of catch the drift of if things are going to be going up, down or maybe a little sideways type price action. But if you're not very familiar with technical analysis, it probably sounds like a different language. That is somewhere where I would start paying attention as to patterns on charts, head and shoulder patterns, inverse head and shoulder patterns, bull flags, bear flags, the whole lot. And again, GameStop can be posting some incredible higher highs and higher lows, which is a classic TA, but still come crashing down. And that's when you have to factor in the other things I said, like fails to deliver. And we'll pull up our handy dandy chart from Richard Newton. And again, if you've been following my work, you'll know that Richard Newton actually made popular this theory of fails to deliver. But a lot of people have been talking about this on Superstock for a number of years. And I think Richard Newton, being the really good kind of communicator that he is or was, brought this to light in a big popular fashion. So in this sheet, and you can do this on chartexchange.com, you can do this kind of wherever you want. This is a sheet that was Richard Newton's that is now being updated by someone else on Superstock. But over here, you can see all of these numbers. These are fails to deliver on GME, on a various number of ETFs that contain or once contained GME, and then XRT, which is kind of the bad boy, if you will, of the ETF products available that might hinder or hurt GameStop if we're kind of going a little tinfoil here. And then the actual FTDs tab of this spreadsheet as well. And sorry that this is so slow to load. There is just like piles and piles and piles of data in this thing. But for anyone saying that, okay, fails get closed out and it's a big nothing burger, well, it's certainly interesting that Richard Newton's cycle theory with fails to deliver has really been pretty accurate in and out of swap season, mostly out of swap season with his patented Babe Ruth graphics. So fails to deliver, certainly something that I would be looking at. And I'll just show you guys on here on Chart Exchange that you can track these pretty easily across any ticker. In particular, this is GameStop itself. I lost it there for a second, but you can do this on XRT, GMEU is worth looking at, IWM, IJJ, IJH. There's a lot of ETF names that you should be looking at that contain GameStop. See what the fails are looking at, see where they're recycling these things, and see when those dates, T+33 in some instances, are due to resolve. Bringing me to the next one, which is cost to borrow. And I put this in the same pie as TA and fails because cost to borrow is really a sign of the demand and the appetite of shorts or of settlement obligations. And cost to borrow, when the fee gets up into the 1% range on GameStop, you can see from chartexchange.com, it's pretty rare. This doesn't happen very often. This is over 1%, 1.40%. Does not happen often. The highest it's been previously, 0.75%, and then all the way back at the bond offering, 3.5%. Now, why is that so important? Why is that essential to look at or to know, in my opinion? Because you can tell when there is aggressive shorting going on. And of course, during a bond offering, it's going to be an extremely hard to borrow security because bond traders, number one, it's a dilutive practice for the business. It's going to increase the outstanding share count. But two, bond desks immediately hedge their bond purchases by shorting the stock. So when borrow fee goes up, it means people are actively trying to short. Now, the lend pool is pretty much on par with and if you guys follow me on X, you'll know I love talking about the lend pool. It shows how many shares are available for shorts or authorized participants, if you will, to borrow if they need to settle fails to deliver or if they're trying to short the stock. When this gets low, like in the 1 million shares range, you know that there could be a swap or some type of market event where they have an appetite to short. I look at this daily across GME, GMEU, and XRT. I would highly recommend anyone else doing the same. Along those same lines is ETF creation and redemption. And the reason why I think this is vastly important is it's not just GameStop that this affects. There's actually been studies on this process across SPY and the broader market as well to kind of catch market tops and market bottoms. It's extremely hard data to find, but as it pertains to GameStop, I will show it to you in that sheet that I was talking about. Now, what is ETF in creation and redemption? I'll show you the example specifically for GameStop, and this is from Perplexity. processes can significantly affect GME by impacting, word salad, supply and demand dynamics, share lending, and even facilitating complex short selling strategies through synthetic exposure. Creation. APs, which are authorized participants, deliver a basket, stop me if you heard that before, of underlying stocks like GME to the ETF sponsor in exchange for newly created, there's your creation, ETF shares. These shares are then sold out in the secondary market, and then when APs need more of those ETF shares, they must buy and deliver the actual underlying stock to satisfy those obligations. In that case, it would be GME. Redemption. When APs redeem the ETF shares, they deliver ETF shares back to the ETF sponsor and receive the underlying stocks in return. That can usually, more often than not, that means they're selling GME onto the open market, and then they'll have to buy those shares back at a later date. Now, this can create synthetic exposure and shorting. We're not going to get into that today. For the point of this video, in this Richard Newton spreadsheet that's being updated, you can see in the ETF column, the green is creation across ETFs, red is redemption. Now, XRT is extremely important to look at the creation and redemption, because the more shares that are created and then which raises the shares outstanding, the lower short interest is going to be. The more they redeem and the fewer shares outstanding on XRT, you're going to see those graphics of XRT, which I post on X, of 1,000% short interest. That's in extreme times of shorting will you see that. When they're creating XRT, normally it precedes some ascending, not always, but often precedes some ascending price action for GameStop. So I would always be looking at ETF creation and redemption. And my third and final thing, and let me know in the comments too, if you guys want me to make a full explainer video on any one of those things I just mentioned, I will be happy to do so. I'm hopefully just giving you guys a starting ground of where to look, where to start, what to dig in on. Last but not least, my third most important thing is do not buy into the tin foil. And I don't say that because I don't read it or I don't like it. I love GME tin foil. I think it's super engaging, super fun to read, but I will never, ever, ever let myself make a financial decision off of a random post you see on Reddit or X or whatever, theory and reason why. The reason why is because it's not financially smart. And if I'm acting in my own best interest and goal is to accumulate as many GME shares as possible. And reading something financially related to tinfoil just doesn't make sense to me to put money into that theory. Now, October 29, the date I'm recording this video, National Cat Day. I love the theory that Roaring Kitty always does something on this day. I think that could be true, but I'm not going out and buying weekly options because of that tin foil. That may be true. There may be something more to it, but I can't make financial decisions on that. Why can't I do that? Because Ryan Cohen is authorized to dilute more shares. And if he's acting in the best interest of shareholders, that probably means raising the cash floor and the cash coffers of the company to protect them from future financial instability, to protect them from capital market crashes or pullbacks, and to make sure that they can jump on any one of those scenarios and transform this company. And with dilution comes red candles down. So point being, I don't do the tinfoil anymore. I love reading it. I love thinking about what the Roaring Kitty timeline means and this, that, and the other. But I like to operate now in financial fact, in data. And even though sometimes the data is obfuscated or you have to sort of put your own spin or logic to it, I think that's at least something concrete that you can look at numbers and make a decision versus a theory on Reddit. It's a little bit more risky, a lot more risky to be doing that or making financial decisions on that. Quick short-term price action update for you guys. Nothing, I'm not changing my prediction on this chart. I'm sticking by it. Very interesting, however, that GMEU is back on Reg Show as of October 29. This thing has been around for 5 months. It's been on Reg Show 5 different times for persistent large fails to deliver. That is absolutely ridiculous. It's quite frankly inappropriate. And I have actually talked to the creator and manager, Matthew Tuttle, of these T-Rex funds. I am seeking a comment as to why you'll see so many T-Rex products, including GMEU, on this list. I'd really like to know what's going on with these products, but that's definitely an indication they are still aggressively trying to contain GameStop. Will it keep GameStop down? Will they kick the can on this potential settlement? It's possible. I don't think there's, that they're doing as much as they can in their disposal to do it. I personally think that they will have to settle some of these, but again, the rules, I am not a securities lawyer. I don't pretend to be a securities lawyer. They know the rules better than we do, unfortunately. So can kicks happen? Yes. I would just be aware that GMEU back on Reg Show, typically when it's on Reg Show, we do see some muted sideways price action. That's the only thing I would look for. But on the other side, they are creating XRT shares, which normally does precede a run in price. So maybe GMEU is on Reg Show through the rest of the trading week, and then maybe early next week where I have this kind of chart going up, maybe they take it off on a Monday and we see some nicer, more exciting type price action. Anyway, hope this was helpful. Hope you guys learned something, and if you didn't, whatever, let me know in the comments below your thoughts. And in the meantime, go GameStop, and I'll talk to you again real soon.